Hi, it's Thursday, the 25th of April, and welcome to our 5-minute tax update for April 2019. As you know, our tax update series is a monthly review of the most important tax developments impacting Cyprus. We will start today's webcast by looking at the most recent developments in local legislation. On the 5th of April, the House of Representatives voted into law the first phase of the provisions of the EU Anti-Tax Avoidance Directive, known as ATAD 1. The amendments are in the income tax law and introduced a new interest limitation rule, a general anti-avoidance rule, and the controlled foreign company rules. The effective date of these new provisions is the 1st of January 2019. Details of these new provisions can be found in our specific tax alert or from our podcast series. So instead of reading our alert, you can actually just listen to the updates. Details of both the alert and the podcast can be found on our tax alert webpage. The remaining provisions of the directive are expected to be voted into law during the course of 2019 and will be effective from 1 January 2020. These are in connection with exit taxation and the rules on hybrid mismatches, with the rules on reverse hybrids to apply as from 1 January 2022. A tax bill has recently been submitted to Parliament for the imposition of special defence contribution at the rate of 3% on corporate bonds as to be consistent with that applicable to government bonds. The current reduced rate of 3% applies on savings certificates of the Cyprus government, development securities of the Cyprus government, and interest received or credited to a provident fund or the social insurance fund. The amendment is expected to encourage companies to issue corporate bonds by giving the incentive to investors who will be liable to just 3% STC on the interest of the bonds as opposed to the current 30% rate. Lastly, on the local developments, a general guide on the general healthcare system known as YESI has been issued by the tax department, which gives guidance on a number of items including which income is subject to the contributions, the applicable rates, details on the calculations of total contributions subject to the maximum amount, deductions from taxable income of the relevant contributions, the procedure as to how the contributions will be collected by the tax department, and some examples. As this is a very detailed document, for those of you who want to learn more, you can download the guide, which is only available in the Greek language, from the tax department's website at the following link. Moving on to international developments, on the 4th of March 2019, the Arbitrage Court of Appeal of Moscow published its decision in a case regarding the requirements for a foreign company to qualify as the beneficial owner of dividends paid by a Russian company. More specifically, the Russian tax authorities denied the treaty benefits on dividends paid from a Russian subsidiary to a Cyprus company based on their assessment that the Cyprus company was not the real beneficial owner of the dividends. However, the court concluded in favor of the Russian company and ruled that the Cyprus company was in fact the real beneficial owner of the dividends based on the following criteria. It had a real economic presence in Cyprus with 7 employees and incurred sufficient costs for the rent of office space, accounting, and audit services. It was engaged in managing foreign investments in several subsidiaries in different countries and controlling the results. It received the dividends resulting from its investments and actually used the income to pay legal and audit costs, taxes, and staff wages. And it had sufficient own capital and also invested part of the income received in acquiring a subsidiary company. This is an important decision as it highlights the importance of companies undertaking international activities to maintain a sufficient level of substance. It is wise, therefore, to take the above factors into consideration when establishing a company in Cyprus in order to avoid issues that may challenge the residency status of the company or its beneficial owner of the income. We will close off today's tax update with a brief reminder of the deadlines coming up. The 30th of April is a deadline for the electronic submission of the income tax return for companies and individuals preparing audited financial statements for the tax year 2017. You will recall that this is an extension of the normal deadline of 31 of March. The 30th of April is also the deadline for the payment of the first installment of the premium tax for insurance companies in the life sector. This concludes our tax update for this month. Have a happy Easter and see you again in May. Thank you for watching.